You are listening to chartingwealth.com for Friday, the 24th of July, 2015. We start with IYY as always, two-day chart. We can see starting on the 13th of July, the market driving up and then coming to a halt on the 21st. That was this last Tuesday. And the market has continued over the last couple of days to move down. We're looking at two-day candles, so the chart tracks time periods of 2 days, and the candle for the 23rd, that is Thursday, is also a down candle paralleling the candle for Tuesday the 21st. When I say paralleling, I don't mean it's the same size. It is actually moving down. We broke the two-day trend line yesterday, and the market moved down again on Thursday. Now, the derivative oscillators continued to move up. We can see a coming together, a converging of the MACD, which is a blue line at the bottom. It is our indicator, along with the signal line, which is an 8-period exponential moving average line. When those come together and cross over going in the down direction, then that means, of course, that we are seeing a falling off, and we would then be at a confirmed down move. We are not there yet. We simply have a backtracking on the charts over the last couple of candles. If we go to our 4-hour chart, the smaller chart, we can see that there was a lot of down move in the afternoon. The morning, not a whole lot happened. That is a doji. It is a green doji. We can see that the 4-hour chart crossed over going down on the 22nd. And again, those of you who are listening by audio, I'm trying to explain this as we go. We had a great move down in the afternoon by the bears, pushed up by the bulls. We ended for the day on Thursday with the market, the total market, IYY represents, of course, the total market, down 0.44%. What do we really see when we look at the final candle on the 4-hour chart for the afternoon of Thursday, the 23rd? Well, we see that there was a lot of down pressure and then a good bit of pressure to push it back up by the bulls. We have the derivative oscillator heated up pretty substantially, and there was a greater diverging in the MACD and the signal line. What does that mean to us? Well, it means any number of things. It shows us that there was a lot of downward pressure, but a lot of upward push by the bulls at the end of the day. Now, they did not end up winning out. The bears actually won out. So we've got some substantial down moves on the 4-hour chart, but at the same time, we're in a confirmed up move still, even though there is some falling off. I will give you this. The last two candles have not been able to push the market down more than the up candle on Friday the 17th. So for the week, we are still up overall as to where the market ended last week. So what does that tell us? Well, it tells us that if we are going to find any ability to jump into this market on an up move, we are going to need to watch what happens over the next couple of days and see if indeed we've crossed over going down. If we see the 4-hour chart move back over and go up, then that, of course, will be for us a trigger to get into that market and ride it up to either the heights it had previously reached or even further. If not, if it continues to move down strongly and we cross over going down, then, of course, it would be a down market. We don't have that yet. We only we judge our market up or down based upon how the MACD crosses on the 2-day trend line. We've broken through the 2-day upward trend line, and we're looking to see if that downward movement's going to be confirmed. Now, let's look over at we're going to stay on the 2-day chart, but we're going to look at SPY. What is that? That's a Standard & Poor's 500. What do we see there? Well, we see actually 3 green up candles over 6 days, and only on the chart for Thursday the 27th, the candle, do we see a down move. Now, we do have a confirmed down move on SPY today of just a little over 0.5%. Not a lot of down movement. We do see continued up movement on the derivative oscillator. We do see a little bit of converging, although no crossing yet, not near a crossing yet, on the 2-day MACD. Now let's backtrack a little bit, or let's go to a smaller chart actually. We're going to the 4-hour chart. What do we see there? Well, we see a crossover on the 22nd as we saw on IYY on the S&P 500. Remember, IYY is the total market. That's what we looked at first. The SPY is the S&P 500. That's 500 big stocks. So a lot of times you'll see some similarity between the total market and all this movement and volume in the S&P 500, but they don't track exactly the same. Crossed over this morning going down as far as the 2-day trend line. We always track that when we can find a trend. We see that the derivative oscillator and the MACD crossed over at the same time, which is always a positive for the movement. Whenever you see those two happen at the same time, that's a good sign. There's going to be more movement in that direction as there was. And the derivative oscillator heated up, as did the movement out, that is the divergence between the MACD and the signal line. So we again have a confirmed down movement on the 4-hour chart, but that does not change the fact that for us, the movement is up on the 2-day MACD, and we will continue to call it up until there's a crossover. Now, if we start seeing, again, another up movement on the 4-hour chart, we would look to get in this because our big chart is up. We always trade in the direction of the big chart. It's the big wave. The smaller waves, there has to be a lot of those to finally change the big wave. But when we see the smaller wave move back in the direction of the big wave, that's our signal to get in. The safest way to do it. So we're going to stay on the big 2-day chart. We're going to convert over now to the Qs. What is the Qs? Well, it's the NASDAQ 100. And it had continued to ride up. What do we see happening on the NASDAQ? Well, we see something close to a doji. What is that? That is where the bulls and the bears, between the opening and the close, it has been almost the same. In fact, the Qs was down technically for the day 0.37%. On the 2-day candle for Thursday the 23rd, we have a doji. What does that tell us? Well, it tells us that the bulls and the bears have about the same amount of power. What does that mean in the market? It means uncertainty. Who's going to win this tug of war? Well, if we look at our indicators, we see that we had a crossover going up on the 15th in the Qs as far as the moving average convergence divergence, the MACD goes. Derivative oscillator continued to heat up today, getting bigger in the direction of an up move, even though there was a lot of give and take. You can see if you look at the video instead of just listening to the audio. And again, we always encourage you to do that. You go to chartingwealth.com, follow us on Facebook or Twitter. You can find the videos there. We post them every day. But there was a more of an up move by the bears, pushing the market further up, again, pulled down by the bulls. A little bit of down movement by the bulls, but again, a little bit of down movement by the bears, pushed up by the bulls. So that shows us there's a little more direction in an upward movement, even though we had a lot of indecision here. Now let's look back at the 4-hour chart and just see what we see. Well, we can see in the morning there was an up move, as there was yesterday afternoon, but as the day wore on, the bears were able to pull the market further down, crossover going down actually yesterday, coming on into today as far as the movement goes. But again, that's the short chart. What do we trade? We always trade our large chart. So again, technically, we also have the Qs in an upward movement. So all three, the total market, the S&P 500, and the NASDAQ 100 are all in confirmed up moves still, and we're waiting for further confirmation in that up move if indeed the 4-hour charts, which are down on all three of those indexes, turn around and start moving up. Now, lastly, let's go to gold. What is gold doing? Well, gold continues to move down. We're redrawing our trend line right now, and we have gold in a confirmed down move, has been confirmed down since the 23rd. when it rotated over on the MACD and has been moving down substantially. Derivative oscillator heated up even further on the 2-day candle for Thursday, the 23rd of July. Let's look back at our 4-hour chart, see what we see. We see that gold could possibly be reaching a bottom. If you look at that, we are showing that $104.60 on GLD. We have been holding right there over the last 2 days. We see that this is on the 4-hour chart, the half-day chart. The derivative oscillator is losing a lot of its down energy, and there is more of a convergence, that's a coming together of the signal line and the MACD. Does that tell us anything totally yet? No, it doesn't, but we pay attention when we start seeing a bottoming out possibly. Now, we also possibly saw that back a few days ago when gold was at 106.02. Well, it had more downward movement to make, so we'll see. Is it going to bottom out there? That's the lowest it's been in a while. Let's continue to watch that. If we see gold moving over, crossing over and starting to go up, we might feel like we reached a bottom. We're not there yet. We're below the 2-day trend line at this point on gold. And if you were in an inverse gold, as far as any of your virtual trading, you have done well, Padawan. You would have gotten in somewhere around 110 and you would have gone down a good $6 or so, which meant, of course, your inverse would have gone up $6. Again, for those of you who don't understand what we're talking about, you can purchase on many, many different indexes and stocks, well, indexes and commodities. You can purchase an inverse ETF, which actually goes in the reverse, such as QID for the Qs. And there's several in gold that you can look at where when the market for that commodity or that index is going in the opposite direction, you can make money because it goes up. Now, let's review the market in total. We'll go back to the 2-day chart. We are technically up on the total market. We are up on the S&P 500. We are up on the Qs, which is the NASDAQ 100, and we are down in gold. We hope that as you wrap up this week, it has been going well for you. Please make sure over the weekend to tune in, particularly Sunday night, Monday morning. We will have our week in review and our forecast. We hope that you have a great day investing and trading on Friday. Remember, pay attention to the charts, not all the noise you hear in the media, because the charts will tell you what's actually going on. Thanks so much for listening. Hope this is helpful. Follow us at chartingwealth.com.